This is Just AMZN on Tuesday, April 14th, 2020. Take a look at the daily, and we had another very strong bullish day. Today's candle was not 142 point range, it was about 106 point range. So I was right about something. It was going to go bullish, it wasn't going to go another 142 points. I was hoping it was going to pull back a little bit more. Like, it would have been great to pull back here and then bounce, but somehow it gapped up, pulled right back into the previous all-time high because it opened at a new all-time high, and people were buying. Immediately, some people were taking profit, and then people were buying, and then it put in a really nice little flag here, or a pennant inside candle, and broke out. This line right here is one of these, and I don't know what happened with the angle here. So something's going on with that angle. I think something jumped, but I think because these, I think because these two are lined up, this red and blue one right here, I think because those are lined up, it's safe to assume that this is the correct angle. Somehow this came back into relevance here. So anyway, yeah, you can see we traded up pre-market, pulled back. I mean, you can't even see any I was looking for a little bit of space between here, but basically this line and the low were separated by 26 cents. That was it. So it just retested the previous all-time high. That's all it did, and then just continued on up. We got a nice pullback into the 21 later, almost touched it again. Really nice triangle consolidation here. You see this triangle, right? I see this triangle. Really nice lower highs, and then some higher lows into a really nice apex, and continued, retested, and then continued on up again. So that was a great place, and that's what I talked about yesterday. Looking for a time for it to rest. It rested into the 21, went sideways a little bit longer, and then showed signs it was going to continue on up. And you're not buying the all-time high breakout. You're buying a breakout above, above a previous resistance. So that would have been buying at like 11 o'clock, or waiting for the retest here at 11:25. The only problem was the option I was talking about, the 2300 call. We almost got there today. We didn't pull back nearly far enough. So the 2300 call was way too expensive for a $100 risk. You safely would not have been able to risk $100 with this option. So you can still see there's some great opportunity with this option to get in on a smaller range. Like, even this candle had a range. This 1055 candle had a range of less than $100. But the very next candle, was a little bit bigger, and you would not have been able to get your stop below. Technically, you could have been getting into this like above here. So like 22 by 20. So that's $200 risk. So you're spending $2,000 risking $200 and looking for it to at least make it up to this previous high. So that's at 30. So, that's a target of 30. You got in at 22, stop at 20. That's a 4R move, and it continued on up. So that's the kind of thing we're looking for, just $100 risk. So let's go out a little further, like 2350, and see what we could have done if the 2350 will load. Okay, 2350, a lot lighter volume, absolutely. Does not have the same triangle shape. This is the first time I've looked at this option on this chart, on this screen. I looked at it on my phone, but it won't even let me scroll back. This is the first. Was it just created today? Come on. It looks like it didn't exist before. Okay, so the 2300 call looks like it may have been born today. It's not letting me go back at all. That's weird. Okay, so I have a really nice inside candle here. This was less than $1. This one, you would have had to get it set up super quick. Get into it at 7, stop at 6. That could have worked. That would have been a little bit risky to do that there. I like the entry over here better getting in, actually probably getting in at like 12 and a stop at 11. Again, that would have been you had 15, more than 15 minutes of this going pretty much sideways. I just don't know how spready the option was. So you're paying less than the 2300 call, but this is still, ideally you'd have your stop down at 10, getting it below this low, and because there's probably some spreadiness there. So okay, let's go out another 50 points and look at the 2400 and see what's going on there. So this, okay, this has some history. For some reason the 2350 didn't, but the 2300 has some history here. Okay, so the 2300, let's just look at today. And coming into 11 o'clock, really sideways, right at $7. I really like this. Getting in at 7 by 6. Well, it'd be a stop limit. Now I got above 7 here. So probably, to be a little bit safer, 750 by 650. And I'd be okay with that. This came down to 660. Okay. Probably, I kind of like 725 by 625 a little bit better. That's $100 risk. You're much further out, 2400. So I would be setting the target at the previous high, right around this price, maybe a few cents below. So instead of right at 11, do like 1075. So that kind of matches up with the 725 entry. And then it would have filled the next candle, or even this candle could have filled. So you had potentially 10 minutes that it could have filled. What I like about this, and again, it's earlier in the week, it's on a Tuesday, so it's not about to just bleed out to zero. It's you got time. That's what I mean. You have time for it to go in your direction, for the option to start moving in your direction. You don't have to be super quick. Even if you didn't get in at the 725, if you weren't setting it up with this, and sure, you missed the market for half an hour here or something, that things come up. If it was already moving here, it's like, man, if it only retested to like this high, I could get a stop around 7. Yeah, 8 by 7, go for it. You're waiting for essentially the move to start, hoping for it to pull back, not necessarily hoping, but just waiting for a quick sort of S curve, and usually you get some sort of pullback. In this case, it did pull back enough here. So, it wasn't like this pennant was breaking out. It was this pennant that broke down, so it's like, okay, there's a little larger pennant going on here, and it starts to break out. It just starts to run. You got 5 bullish candles in a row. It should do something to pull back. Somebody's going to take profit at this new all-time high. Sure enough, they do. This very next candle, and pretty close to tweezer top there, 21 cents off of tweezer top. Pulls back in here, almost right back into the high of this candle. You're not going to get quite as much of a pullback on the option, just because market makers aren't just going to hand that price back. They give some of it back, but it doesn't come back to, the entries that people were getting in here. But still, you could have gotten in about 8, around the same high as right here, about 8, and stop at 7, and immediately you're profitable. These are the ones I really like, where it kind of does this flash down into a price that if you just were waiting and you were more patient, you could have been filled, and then immediately it starts to bounce, and you're all of a sudden profitable. You can either scalp that and take a profit immediately, scalp half an hour, scalp an hour, let it ride, move your stop up pretty quickly. I don't move it up like immediately, because again, it can wick back down and then come back up, and then you just move your stop too quickly. But if it starts moving up, and if you're already up at like 2R within like 2 candles, that's a good time to move your stop, because you want to, if it reverses, and I don't like it when it turns from 2R and then immediately I give it all back. That's what I try to avoid. If it goes up to 2R, I want it to stay up there. I want to at least lock in something. I'll give it some room. I want to lock in a small gain, whether it's half an R or a quarter of an R. I want to lock in something if it comes back. I don't want to see it at 2R and then give it all back. That's what I'm talking about. Or give, turn a 2R gain into, or 2R unrealized gain into a loss. because if it moved that quickly, I got to respond a little more quickly, that kind of thing. Um, so in this case, went up to 2R, pulled back to an R, went back up to 2, went sideways, hovering around 2, 1.5. And then from there, it continued on up. Once it continues on up and starts moving higher, that's when you can start to move your stop up some more. So it's like, okay, stop is at 8, stops at 850, stops at 9. It's still below this candle. We're drifting down here a little bit. Okay, once it starts to pick up again, gets above this bearish candle, makes a similar high here. If you're not already taking profit right here at like 11, or like I said, 1075, which in this case you probably would have been out here. But if you're holding through this, it's holding through a rest, holding through kind of a retest, but a little more of a rest. If you're holding through all that, you got to give it a little bit of room. And then once it gets going, that's when you set you get your target clear identified, another R higher or another R higher, and you start trailing up your stop and you're squeezing to get out of it. You're squeezing between what your target's set at. So let's say your target's at 14 and you're moving your stop up. So you move your stop from 9, then to 10. After this candle, you get your stop right here at 10. It shouldn't come back and take out this candle. And then you move your stop up to 11 when it starts doing this, and it's kind of drifting around. It's like, I want to get out, for a profit, for a bigger profit. I could have been out at 13 and I'm going to give back 2R back down to 11. I don't like doing that either. I do that too much because I should have just locked it in at 13, but it's like, okay, 14 is just a little bit higher. It should keep going. Sometimes it pulls back a little deeper and then goes there. And that's times where it's like, okay, if I got out at 13, I could have reloaded at 11 and then run up to 13 again. That's another 2R. If I had just taken, that move, that wave, getting out on its way up, not held through a retracement. Anyway, got to talk about something else besides just how, straight up bullish it was today. Again, today we had, I was going to say 3 candles. Nope, we got 4 bearish candles in a row today. 3 here, 4 here, and then that was the most we got the rest of the day. Oh, nope, sorry, 3 here again. So look where we ended up after hours today, right back on this line. Interacted with a little bit during the day, and again, I just want to see a little bit of a deeper pullback. I don't know that we're going to get a pullback to the previous all-time high. I think we will in a couple days, but I don't know that we're going to have a big pullback here unless something happens overall in the market. But this is where I'd like to see a couple bearish candles coming in, 1 or 2 bearish candles coming back into this level, and that's going to be your S curve, your quick S curve, and then it'll pick back up, and then have another bigger secondary S curve. Maybe that'll be around earnings or something. When's earnings? So we don't have earnings on here yet, but it should be in a couple weeks here. It was January 30th. So we should be looking around the end of April for earnings. So, that's enough time to have a couple bearish candles come in, hold this level, or maybe dip down a little bit below. Some bears get a little aggressive and try and push it a little bit lower. Even if we come down to this level, that'd be even better. Then we rally into earnings, and then earnings, if we're up around 2,400, 2,500, see if we do something to pull back, have some sort of some sort of strange response to earnings. I don't know. We'll get to earnings in a couple weeks. But it's just bullish right now. So wait for that pullback, wait for these rests. It's giving it to us. We got a rest here. We've got a small rest here, a really small rest here. This to end the day, this was sideways. We barely pulled back. Yesterday, compare it to yesterday, we just went straight up all day yesterday, except for right here, we went sideways. And we did this same sort of thing earlier in the day today here. Oops. Don't do that. Okay, got stuck. Sorry. There we go. We did that sideways thing a little bit earlier in the day here, and then went sideways again up here. We're already resting. it doesn't like it pulled back a little bit. It doesn't have to pull back anymore. We could have another bullish day up. If we do that, again, I don't think we're going to do 142 points. Could we get to 2400? Yeah, we definitely could get to 2400. That'd be about 100 point, depending on where we open, but that could be 115 point move. I mean, that'd be massive to see that kind of a move going up. We've had big moves going up. Let's see, back. No, I was gonna say some of these were bigger candles. This is probably the largest 2 days in a row, staying in that direction up we've had. Nothing like that here. Even what we just did experience down here, we didn't just go straight up so quickly and with such strong bullish candles like we're doing now. This was a recovery. This was, this was a rest. This was a, continuation, and this was just a breakout. So, yeah, I don't have anything to compare this to. So it's just going bigger than we've seen before. Nothing puts. You can look at puts, but oops, that's still the calls. Puts. This is the 2150, and we were below that price that started yesterday, which is just crazy. It's that far ago, that long ago. What's interesting here is we put in this low right around 1220, 1230, and then we actually increased in the put price, in the 2150 put price, but the 1220, 1225, that time of the day was here. So after 1220, 1225, we made another high above these candles here. We made another high once, twice, 3 times, 4 times. So each of these times we're above these pivots here, these peaks were above 1225, 1230 candles. But on the puts, we actually made 1, 2 lower lows than this price. The very next peak was higher on the put, which doesn't make sense, and so was the next one. And then the next one after that over here started to dip down a little bit, was still above this. So, it's just, I see that as the market makers not giving up the premium when, whatever metrics they're using, whatever things they're saying, oh, this is about to slow down, so more people are going to pile into puts, but it's not about to roll over. So they're just charging people more to buy puts. And it's not time to buy puts yet because it's just going sideways. I mean, if you're going to buy a put, just scalp it. Just get in quick. Look for a quarter hour, look for half an hour. But I'm not really advocating, hey, get into puts, risk your R. Just do something to scalp a little bit. If you're watching something, if you see divergence, something saying, okay, there's going to be a little bit of bearishness coming in. I mean, we had the histogram here on the squeeze getting lower, less bullish, but it wasn't bearish until over here on the histogram. But even that, it just moved a little bit, and then we were right back to being bullish. So it's like these pullbacks are times, these lower histograms or moves to the negative side of the histogram are looking like signals of some sort to look for that bullish move, look for that bullish reversal, look for that S curve, and then be into it bullish. That would have been a great signal here as the histogram dips bearish to get in bullish here or here. And then this one over here again, it dipped bearish. This would have been a good time to get in bullish. Again, just for a scalp, because it's, you're just going sideways for all this. But like I talked about yesterday, the 21 was the place to be buying yesterday. It was again today at open, middle of the day, and even anywhere in here if you were, just knowing exactly what the risk was because you're just up so high. Along with these places to buy, you also had the histogram dipping down. I didn't really, talk through that as much or see that as a signal for today, but it worked today. We'll see if those things carry into tomorrow, or if we start to switch back to some sort of a pivot like this uptrend channel, or another pivot line if we can somehow get a bigger pullback. Um, Even if we can retrace into some of this level, the 2250 level, that price range, or somehow the 2133 price that we've had out here for a month or so, well, since last earnings, so 2 months now, 2.5 months. Anyway, if we can get a pullback into those levels, those are the next consolidation points I'm going to think of. Okay, this is, so for this S curve, this is a quick retracement and a breakout. We need a secondary retracement at some point. This one as well. From this point, we broke out. If we can get this was the first retracement, we need to get a second retracement, and then that's a good place to be, confidently looking for it to bounce. It might not bounce. Just gotta wait and see if you can get it on the setup, and if it works, great. If it doesn't work, okay, it's just gonna pull back a little more, and maybe it'll work the next time. So that's the daily, that's the 5-minute, that's the calls, that's the puts. Let's see what we get tomorrow. Hope this helps. This is Justin AMZN. Thanks.